What is up, you guys? Today we're watching a video from CNBC about one of the major buyers of homes in America, Wall Street. Let's take a look. Alright, this video was published about a year ago. It pretty much reigns true even to this day, so let's get into it.
There are many problems in the modern housing market, but the biggest one for Americans tends to be the price.
Prices rose 40% from the start of the pandemic.
Yeah.
In the final quarter of 2022, the typical U.S. home sold for a record-shattering $468,000. That's unaffordable for most Americans, leaving them to rent.
And the unfortunate thing is that that's increased even from then, right? 2022, 3 years ago, it is only increased. Nothing has really gone down since then.
The housing costs are completely out of line with wages.
Some members of Congress believe Wall Street is a part of the problem.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes.
How's
You're
that?
subsidizing Wall Street.
Massive private equity firms like Blackstone and Pradium Partners have backed a relative.
Yeah. If you look into Blackstone and their companies that they own and the things they invest in, you can see that Blackstone is very much in the honeypot, essentially, of everything. They own pharmaceutical companies, they own real estate, they own a whole bunch of companies that they have a major majority in. You know, even your cereal, they own that. They own a vast majority of Kellogg's, and it doesn't surprise me BlackRock is on here.
Relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
We heard from community organizers that are door knocking in certain neighborhoods and are just surprised by how many of the homes on a particular block will be owned by a corporate landlord.
Yeah.
Industry advocates say corporate landlords play a critical role in addressing the nationwide housing crisis.
What we have in housing in the United States is a chronic shortage since the financial crisis.
And so the question really is, how do we fill that gap? Is the answer incentivizing new housing development, new housing investment, new market participation?
What's behind the rise of corporate landlords? And how?
See, I see no issue in them owning it if they build it, right? If they build these communities and, you know, they build affordable housing or they even build single family homes, I have no real, I'd say there's no real grounds for me to be mad about them owning it because they built it, right? The gripe that I am, you know, and a lot of other people are kind of facing is when they also buy single family homes just anywhere, in any neighborhood, and they make it into their own little rental ecosystem. I'm pretty sure they're going to get into that in this, but that's just my 2 cents before anything starts.
If at all, will the government regulate them? As of 2023, corporate landlords only command a small portion of the rental housing in this country. The vast majority of all rental units, including apartments, are owned by individual, small-time investors.
Really?
But
Even
there's growing
apartments?
focus on single-family homes.
Institutions, large companies, only account for about 1% of all the
1%?
rental housing in the United States, and only about 2% of the single-family rental housing.
There's a
What the
small
hell?
but mighty group of companies that lead the industry.
So Pretium is the parent company for a company called Progress Residential that owns about 90,000 homes. They
90,000.
were started by Don Mullen, who came out of Goldman Sachs' mortgage group. Invitation Homes was started by Blackstone, but Blackstone sold their position a long time ago. They own about 80,000 homes.
80,000.
American Homes for Rent, which was started by Wayne Hughes. They own about 60,000 homes. There's a company called Tricon Residential that's out of Canada. And then there's one called Amherst. Those are the big five.
Really?
In recent years,
You see, I thought it was a lot more. That could be just numbers being skewed a little bit, but I feel like there was a lot more corporate landlords. What is the definition of corporate landlords? Let's see. So a corporate landlord refers to a company or organization, often a large investment firm or real estate trust, REIT, that owns a significant number of residential properties and rents them out to tenants. Okay. So The term corporate landlord is often applied to firms of varying sizes and types, from limited liability companies only a handful of properties to real estate and investment trusts with several thousands. So, what is the difference between that and a private landlord versus private landlord? So basically, a private landlord is just an individual person who owns and rents out their own property. So are they also getting corporate landlords in? I think they're only labeling corporate landlords as like major companies that own homes. In the video, at least. So they're not like doing your regular mom and pop landlords that have like 2 to 3 houses, and one of them's, you know, is your house. Okay, interesting.
In recent years, corporate landlords have been most active in the Sun Belt. In 2021, corporations bought 28% of all the homes sold in Texas.
28% in Texas?
That figure was 19% in Georgia and 16% in Florida. Companies like Pradium and Blackstone target these markets. Blackstone in particular has held large stakes in several companies that dominate the region.
Yeah.
Rent hikes for single-family homes in this region have outpaced other parts of the country. Since the onset of the pandemic, rents for a 2-bed detached home increased about 43%.
Yep. We're in Phoenix. I'm in Phoenix, actually. And that number seems about right. 43%. That's crazy. Since 2020. And again, the numbers don't seem to be dropping at all anytime soon. Because especially if you go on Zillow, it's going to end up being about like 1,500,000 for the base minimum or whatever you want. That'll get you maybe a studio. And if you want an actual home, it'll be upwards to 200 to 2,000 plus. That's insane.
% in Phoenix. They're up 44% in Tampa and 35% in Atlanta. That's compared to 24% nationwide.
Yeah.
Experts say that many of the properties bought up by institutional groups were previously owned by people who were destabilized in recent recessions.
After the pandemic,
Okay.
people saw the opportunity to go into these lower income neighborhoods, working class neighborhoods, buy up these houses, and in communities that the working class can afford. And they're holding these houses, often for years, taking them off the market, making it even harder for young people and working class families to own a house.
So the companies saw that a lot of people were in distress, i.e. they couldn't like pay their mortgage, they had trouble, they were falling behind on their mortgage, they lost their jobs, whatever that kind of distress is, and they decided to snatch those homes up. In doing so, they were also able to keep those homes under their possession, pricing everyone out essentially.
Companies like Blackstone make serious money from these investments.
Yeah.
For example, the company's real estate income trust delivered an 8.4% return on investment in 2022. This in a year when the wider stock market declined nearly 20%.
Part of the problem with private equity involved in housing is that they're in it for the short term. Their goal is to take a company, increase cash flow in order then to sell it or to take it public, which they did in the case of Invitation Homes. Unlike, maybe smaller landlords who still are looking to have a profit, may be in it more for the long term and see it as a long-term investment,
Right.
are more concerned in terms of stability and concerned in terms of satisfied tenants and wanting there to be less turnover. With private equity, it's really about kind of maximizing the short-term returns.
In particular, real estate funds issued by private equity groups can be a useful hedge against inflation, boosting their popularity. Analysts write that by 2030, institutions may own 7.6 million single-family rental homes. That could be more than 40% of the market. But that's a big if. Many real estate experts say the main solution to the problematic housing market is to build fast.
In the late 70s, early 80s.
We've already seen the results of building fast, right? We've seen a lot of these building companies, prop up homes in a matter of like maybe a year and a half, and they're all very, very shoddily built. They have, many, many problems with them, even though they're new homes. And that comes from like supply issues, supply quality, and just, slapping it together just to make a profit. So I don't really know if building fast is the actual answer to this, but we'll see.
The United States routinely generated between 300,000 and 400,000 starter homes a year.
That's great.
In 2020, we generated 65,000.
That's
So
okay.
We have a situation now where we're trying to catch up, but we haven't quite gotten there.
15 years ago, lots of homes were coming onto the market. As Wall Street's risky lending led to a crash in the late 2000s,
Right.
scores of people lost their homes.
2008 crash.
Roughly 8 million mortgages went into foreclosure between 2007 and 2016. Institutional investors stepped in, buying up homes that were on sale.
A lot bigger investors started to get into the rental game. They started buying up thousands of these distressed properties. And actually, they really helped to put a floor on home prices because home prices were crashing so hard.
There was a decision to subsidize some of these private equity firms to go into the housing market. You could argue that that was needed because the market had been so suppressed.
This crash led to the birth of the single-family rental industry.
So I had a friend of mine who was very well connected. He took me all around
Real estate
Washington, D.C.,
consulting.
and I just shared what was going on. And then out of that, I met with somebody at HUD whose idea was like, why are we going to foreclose on all these people and try and create huge losses for HUD, the Housing and Urban Development, and then provide all sorts of rental assistance to these people who are going to need it? Why don't we just basically keep them in the house, restructure it, maybe say, okay, you're a renter now, not a homeowner, but cause a far less distress.
You started to see the emergence of professional management in the single-family rental.
I also feel like that's very predatory, right? Where it's like, hey, you can either lose the house forever, be homeless, and have a very difficult time getting anywhere else rented out because you have a foreclosure in your name now, or you can quote unquote sell us the house and then you'll be a renter in the house that you already own. In that situation, the people are just kind of they have their hands tied behind their back. They have no choice. Obviously, they can try to rough it out in the streets, or they have family they can live with, or who knows, they might still have a job after 2008, and then be able to steadily get back into that home environment. But if they're offering their own house to them as renters now instead of homeowners, that seems like a very appealing thing for someone in dire need. So while yes, there was some logic into that, it's very predatory, and I feel like it was their only choice if it even got brought up.
Some space.
I mean, it was needed maybe for a couple years, not for a decade, where it's lining the pockets of people now on Wall Street.
Still, many people say that the institutional investors are providing a quality product to relatively high-income individuals.
They figured out pretty early on, like, it's pretty hard to be profitable when you're focusing on people who are missing payments all the time and living in 70-year-old homes that need a lot of CapEx. So the Wall Street group has focused on newer homes and higher paying, higher income tenants who are more discretionary renters, not out of necessity, because that's been a better profit model for them.
Other experts point out that given the supply constraints, there aren't many other options for people on the market.
It's almost a captive market, particularly in terms of with single-family rentals.
Right.
They've been very explicit about how people are shut out of the home buying market and are going to be perpetual renters.
Renting or buying your home is one of the most consequential financial decisions an individual will make.
Home ownership is the main way in this country that people build wealth. And while in some ways it may not look very different whether somebody's renting or owning a home, financially it's very significant both for that individual family and for communities whether or not they do own the home.
Yeah.
That said,
Not everyone wants to be a homeowner. They want to be able to rent for a little while, potentially move within that neighborhood, or move to another state. Moving and flexibility has become a premium to most consumers. So renting is not considered less than buying. It's actually favored by a lot more consumers.
And, you don't have to buy if you're able to afford it. Like they were saying, it's really more about flexibility. Like, if your landlord increases your rent $100, $200, you can be like, okay, cool, or I'm moving somewhere else. Or, hey, I'm taking a job out across the country, so after the lease is up, that's it, I'm getting out of here, right? When you buy a home, you're very much set in that location for like a long period, at least 5 years, right? That's so you can get all the interest payments out of the way, or at least a little bit of the interest payments out of the way, while you're getting a tiny bit of equity still in the house, because you don't really build equity for a couple years, but it gives you some time period to readjust after buying a home. So if you're renting, good on you. Don't feel ashamed for renting, and also just know that buying a home is a lot more challenging than people would think in terms of actually like maintaining, keeping it up, and sort of being stuck in that area for quite a bit of years. Yeah.
Some of this can be observed in this chart. It shows the so-called home ownership premium. The time periods depicted in blue show when renting would be a better deal. That includes most of 2021. In the periods marked red, owning was a better deal. That includes many of the years following the Great Recession.
Yeah.
The changes in the home ownership premium are driven by home prices and mortgage rates.
Usually the cost to be an owner are a couple $100 a month higher. And especially if you start throwing in maintenance and other things, it's even higher than that.
Lots of potential buyers may be waiting for a wider correction in the housing market.
Over the last 40 years, the housing cost for the typical home in America compared to the income of the typical home buyer has been running 29 to 30%, whether you look at the median or the average.
Damn.
It has blown out to 42% right now.
Oh my
We have a
goodness.
pretty significant home price decline forecast coming.
I've seen anything from really not falling at all this year to dropping back 10, 15%. Now, the thing that is different this time around than during the Great Recession is that supply and demand issue. There's still not enough supply, and that's going to keep prices inflated.
Right. He's talking about a forecast of home prices decreasing. It's been a year since the video was uploaded. He's kind of correct. There have been a lot of markets that have been cooling down. I know because I keep an eye on it because I want to buy a home eventually. But some markets have, some markets have stayed pretty much the same. But with mortgage rates going up and looking like it's staying up, it's going to be a lot harder to get those prices that people are listing it for. So I think eventually it's going to end up decreasing. Nothing crazy like what they're trying to say, like a 15% decrease. Maybe a lot lower than that. But we are seeing it, which is good.
Some experts believe the best way out of this problem is not to limit corporate landlords, but rather to do whatever it takes to build more housing.
Some of these big REITs, these landlords, are actually building homes. They're adding to the supply that we desperately need.
Experts believe this trend could help, but it needs far more time to prove its value.
We can
Right.
only find 909 actively selling build-to-rent communities. About 10% of the rental home construction in the country right now, but 26% of renters rent a single-family home, so it's not even keeping up with the pace of rental demand for single-family versus apartment.
Some members of Congress believe limiting corporate activity in the housing sector is a good first step.
Wall Street is going to buy up a single-family home, and it's vacant for a couple of years. We're going to tax it, forcing these firms to sell that back into the market. We're saying
good
you
idea.
don't have private equity buying up single-family homes. That's going to mean there are more single-family homes on the market.
With a split Congress, it would take significant bipartisan efforts to pass.
Yeah.
There are some bills
that's the
in
issue.
Congress which want to limit the amount of homes that investors can own, and they're unlikely to get through because they're pretty drastic. They're telling investors that they're going to have to only be able to own, in one sense, 100 homes, or they're going to have to pay significant taxes on the
100
others.
homes?
Now, these institutional investors own thousands of homes.
In a statement, Blackstone told CNBC that every home they own could go to a resident who hopes to buy the home later.
I mean, we think, frankly, that they just own too many, particularly in terms of the single-family home industry. I think there are ways, such as implementing additional taxes on them, that would either generate money for affordable housing or encourage them to sell off from their portfolio.
Right, like, I see no issue if corporate landlords own, like, an apartment building or, like, RV parks or whatever it is, right? I don't see why they need to own thousands upon thousands of single-family homes, right? And the only issue with that is that they have an absorbent amount of money already. They have firms, they have trusts that they can get to, fund those purchases. And after that, anything else they make is, just trying to recoup that. And after they recoup, eventually, all of it's just pure profit. So just getting single family homes just completely takes them off the market for anyone that actually wants to buy a single family home. And I just don't see the logic in it. Let them only have apartment buildings. Leave single family homes alone, please.
We do support rent control, just cause eviction, different conditions in terms of to ensure the habitability of a property.
On the ground, a litany of states have tried to provide direct relief to tenants through policies like rent control. Groups backed by Blackstone have fought back hard. In 2018, the company spent about $7 million to oppose rent control for single-family homes in California, according to researchers at University of California at Berkeley. In a statement to CNBC, a Blackstone spokesperson said the proposition would have exacerbated the state's housing crisis. At the same time, the private equity group has not made meaningful investments in building new single-family homes.
There's going to be a bit of distress there, but long term, this is the first inning.
Yeah. Wow, good video. Alrighty guys, that's it for today's video. Leave a comment down in the description below on your thoughts about the corporations owning homes. And don't forget to leave a like, comment, and subscribe. Thanks for watching.